GM, welcome to the outlook of October. This is where I do a super high time frame analysis of the cycle, looking at the charts, flows, and narratives. So if you're a high time frame trader or high time frame investor, you're holding crypto long term, you're holding assets long term, this is the video for you. Or even if you just want to understand the cycle and what we could potentially see for the rest of the year, tune into this one. And as always, if you guys enjoy my content, you value content from a real full-time trader, make sure hit that subscribe button, send it to 200. I'm screenshotting my first 200 subscribers because you guys are the OGs of the channel and I want to make sure I know each and every one of you. So without further ado, let's dive into it. Bitcoin monthly chart. So clearly we are in a monthly uptrend here. You have the monthly market structure over here. So this is the monthly low, which led to the most recent high. And that most recent high is over here. So this was the monthly close of July. That's our current highest monthly close. And what we have on the monthly chart is some clear accumulations and distributions, which we can analyze through the wicks. So we topped out on Trump's inauguration, wicked up to 109K, and the push to 109 led to a move down 32%. So we know that all the price action within this wick where buyers lost control was distribution because it sent price down 32%. And when you then look at the charts as they go on, you can see that once we started trading within the distribution, after we dumped down, price started accepting in there, and that led to price actually rallying higher. You can see over here, the candle of June started accepting within it, the candle of May started accepting within it, and that led to a push higher. And of course, you had your accumulations over here by that same regard. Again, we know this is accumulation because it led to the move, which went 67%. So when we actually go to the daily chart, it becomes clearer to see. So you see this red box over here, that was this price action here. We had the clear sweep of the highs with a news event failure. So Trump got inaugurated, first crypto president, got sold into Pico top. Smart money used that as exit liquidity, otherwise known as distribution. And we got the mark down, of course. And then this was your lovely reaccumulation, which led to the mark up. So super simple. Now, if we go to something like the weekly chart, it becomes even clearer. So again, this distribution over here led to that 32% move down. We then reaccumulated, marked up. And once we started accepting within that distribution zone, that led to your markup to new highs. And of course, what happens when we come back to it? It holds as support because the previous area where supply outweighed demand, price is now trading within it, marking above it, which means demand is now outweighing supply. It's not magic. That's why when price comes back to it, it's the area that holds as support. So back to the monthly chart, this zone becomes the area to hold now. Yes, we're rallying in the first couple of days of October, but we've got to look at all scenarios, right? Q4, it's a long 3 months ahead. I doubt we're going to get 3 green months in a row, but more power to it if we do. However, there's some clear zones here. As I said, we've got 102 to 109. That is now your monthly block over here. If we lose that monthly block in the coming months, then you have to look at something like your monthly EMA bands, which have held as your trend support in 2024, as your trend support in 2025. So buying as close to these monthly 12 and 21 EMA bands as possible has offered your high risk to reward, high time frame buys. So great for investors, high time frame traders to buy as close to these bands as possible this cycle. And of course, when they flip green, when they flip bullish, that was the trigger for the bull market. Therefore, if we lose these zones over here, this previous distribution, which we flipped into support on the monthly time frame, well, that probably leads to a consolidation lower and likely triggers the bear market. So that can look anything like this, where you simply come down, have to reaccumulate before marking up. Now, we are, of course, getting later into the cycle. If 4-year cycles are going to hold, then 2026 is when you would expect the bull market to potentially end. So could potentially look like this if we do lose this zone. That's the trigger, of course. But the point of me saying this is I don't think we're going to ever see a bear market, or at least not this cycle, where we go down 70, 80, 90% like this, because we've not seen this parabolic monthly price action in this current rally. Instead, it's been sustainable monthly uptrend where we've had consolidations, mark up, consolidation, mark up. You've had accumulations, distributions, whereas this is not accumulations, distributions. This is just parabolic price action going up, 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 and up. And that's why it comes down, down, down just as quickly. So what we're looking at here is price is marking up healthily. Therefore, the bear market's probably likely to be more healthy. Now, that's the trigger for the bear market if we lose this zone. Not saying that's going to happen. In fact, it looks like we're going to have a stab at the highs over here in October with the way this candle is shaping up. Therefore, what we want to now look at is this distribution, because price did in fact distribute here. So let's take the bands off for now. What you saw on the monthly was price got up to 124k, distributed, which led to a sell-off of 13%. So not quite the magnitude of the previous distribution, but still distribution nonetheless. And again, when you go to your daily chart, it's very clear to see you had a nasty sweep over here. So smart money again used that liquidity over here to exit their positions, dumping on anyone trying to catch the breakout trade over here. Also wrecking the stops of shorts. So an area where they can generate a bunch of liquidity to fill their orders as whales, because remember, whales don't sell where they want, they sell where they can. It's very different when you're a high time frame, large player in the markets. And that was the distribution. Therefore, we go back to a lower time frame on the weekly. This is now the level to start accepting it, which we're starting to do. So good signs, much like this. And you really now just want to flip this level, which becomes your next potential support zone. So by all means, this market can go much higher, and we can instead see something like this, where we continue marking up as we head towards 2026, and we then actually see a bear market begin from much higher, and potentially this holds as your support. And if this doesn't hold and we need a deeper bear market, then again, potentially you just see some sort of reaccumulation after that, where we bleed a little longer and Bitcoin falls into really a higher time frame range. So again, I think gone are the days of your huge bear markets. I think unless Bitcoin has 1, 2, 3 huge parabolic months in a row, which is possible, guys, definitely not out of the question for Bitcoin to absolutely send and go to all of the moon boy targets that you see on Twitter. Sure, if we mark up like this, then you can see a much deeper and bloody bear market. But if that doesn't happen, then you're just looking at your accumulation support zones, taking your EMA trend bands out, looking at the monthly bands. Where could these hold currently? It's at 88k, that lower band, and the higher band is at 101k, and that's rising. So they are interesting levels to look at whenever it all does end. But as I said, on the weekly, we're now accepting within a previous area of distribution. So the longer price can stay in this area and actually mark out above it. That's going to lead to your next leg higher, however high that may be. So that is the level to flip. That's where sellers previously showed up. So you want to see Bitcoin mark up out of that. Otherwise, again, you can look at even your weekly EMA bands, which currently you're seeing the 12 and 21 EMA bands hold as support. So remove these drawings for a second. You can see once led to new highs, and potentially here it's going to lead to new highs again. And if it does, then that's your trend support. That's what you expect to continue holding as support in the trend, as it's your primary EMA support. Now, if that doesn't hold, you look at your 50, which is around 98 right now, and that's going to keep rising, of course. And if that doesn't hold, then you look at potentially your 100 EMA. And again, that's likely when the cycle is all over. So that's what to look at. Track those EMA bands. That's your fast trend right here. That's what you want to see hold if we're going to start marking out in October and really have that push in the short term. Now, October may not finish green. I know we're having a great start here. We could see a red October and a green November and green December. And potentially it's your 50-week EMA, which rises towards 105, 110. And you see Bitcoin now on the lower time frames. Let's look at some paths. Actually do something like this. So we just continue consolidating. We come for a move back down to retest some of this. Maybe it's a little more volatile, and then you actually see this 50-week EMA catch up a little bit, and that's where you get a wick into that band, and that holds again as your cycle support, time and time again, which you would expect to lead to new highs. So yes, October's pumping. Yes, it's going crazy, and we'll dive into that heavier in the lower time frame analysis, but keep this in mind, guys. Could see some different paths here where you actually have a green November, green December. Now, if we do just mark up in October and this move is really just going to break out, then it's going to break out above this distribution, as I said. And from there, you can instead see something like this. So immediate continuation path where you break out and flip this distribution zone into supports. That's 115 to 124K. That is your two scenarios and the way to play all of the buying and selling that we've seen going on here on the high time frame. And that's the way to use your trend support bands to give you your areas to actually take a trade based on whatever scenario you get. So that is the high time frame accumulation and distribution analysis on BTC. Now, I do want to go into the daily analysis on BTC, sticking with this asset. So not that chart, but actually not that chart. So many different charts. It's going to be this chart over here. So I went through this chart in morning markets with you guys. And now we're going to zoom in a layer further. Look at this daily chart. What are we seeing? Well, potentially we're looking to close above the value area high today, which is something which Bitcoin's not like to do. Every time it's closed above, it's to a sell-off. Could only wick above previously. So price acceptance above this level in October would be nice, would be good, and can lead to that scenario where I say we're just going to mark up and flip this distribution into support. But if we don't get that scenario, you could see something like this where Bitcoin just consolidates before building a higher low somewhere, and then Bitcoin goes higher. And you actually see October finish roughly flat, and it's November and December that bring your bullish months. Perhaps traders get over leveraged in October, and these first 2 days of absolute up only gets people too excited, and then you then see that higher low get built. And that's really all that's key, is just to build another higher low. Because again, your ultimate invalidation comes back to this zone over here. You don't want to see Bitcoin going below this zone because that's going to lead to likely the bear market, and where you're going to see Bitcoin just start ranging again and falling back into here, which can then lead to higher. Again, not going to see those huge bear markets unless you have a parabolic move up. It's all very healthy and efficient on Bitcoin. So that's what I'd be looking at pathwise. And of course, this higher low is also valid if we go down to this high time frame SR level. So can be anywhere in there. So keep that in mind. Yes, it's October. Yes, it's bullish, October and everything. But if you plan for all scenarios, then you're not going to be surprised and you know how to trade them all, because Bitcoin can be bullish coming and forming a higher low. Bitcoin can also be bullish by marking out and going higher. So alternatively, the worst thing you'd want actually see here is something like this. So it would be Bitcoin to just continue marking up in October, take the liquidity and come back down. So you'd much rather see, if October's not going to break out, it to leave this liquidity untouched. And then, as I said, just form that higher low wherever it's going to be. Because if we actually take the high and then come back inside, now you're toying with a triple top. That is not what you want, because that can potentially lead to this all just being distribution, which it very well could be. As I said, you've got distribution here on Bitcoin, led to the selling. So if we just wick the high over here and form some topping pattern, well, what's that going to look like? Again, it's going to look like a triple top and potentially lead to a flush. So that's why it's key to actually see, whenever the markup comes, Bitcoin actually hold and flip it into support and not just take the liquidity and distribute. Otherwise, you're going to see that mark down potentially like this path over here, and this all just being one big range of exit liquidity. So keep that in mind. You don't want to see the highs get taken unless it's going to break out and hold and lead to the markup. If it's going to stall out, you want to see it stall out before the all-time high. Leave that liquidity. Look at all of these bullish consolidations, guys. What does this do? It leaves the liquidity. It leaves the liquidity. And again, even this wick here, it leaves the liquidity. What does this consolidation do? It doesn't leave the liquidity. That's because it's distribution, guys. Smart money, what do? They want to trap breakout traders at the highs, because on low time frame, this would have looked like a breakout is starting. People would be seeing fractals on Twitter or Bitcoin going up only and be 100x leverage long. Oh, you're just going to fill the sell orders of a bunch of whales. They distribute and send this price back down. And then we have another bullish example. What is this? Smart money leave the liquidity. Smart money leave the liquidity. And you get the picture, guys. Look at all of this liquidity left every single time. It is not a coincidence. This is a feature of accumulation, because what is this liquidity? It's going to be shorts building up, building up, building up. And if you let them build up, all of the short liquidations, that leads to your big markup where they get absolutely destroyed, and it fuels the rally. It fuels the markup. Again, fuels the markup. Therefore, that is the reason why you don't want to see the all-time high get taken and we flush back below, because that's using the liquidity as distribution. If we are going to have a retracement, have a pullback, you want to see that all-time high liquidity left, and then price markup later on, having built that higher low, so still being perfectly fine. And these are the support zones that I dived into on morning markets. It's value area low to value area high, interim support, and your primary support at the high time frame SR level. That's going to be, your last support on the daily time frame to build that higher low. So that is the Bitcoin analysis. Now, how do you know if the breakout's more likely to hold or distribute? Well, what you can do is take a look at Bitcoin dominance. So if we go to the weekly on this chart, Let's take off the bands. You guys will know that. Look, every time Bitcoin dominance is rising, it allows Bitcoin to actually mark up. As soon as Bitcoin dominance started declining, this topped out. So if we actually go to the daily, it's going to be more clear. It's not confusing on different time frames. So as you can see, once Bitcoin dominance started to dump and lose key levels, that's when Bitcoin was distributing. Over here, that's the distribution. However, when Bitcoin dominance was actually rallying higher, this led to your markup on Bitcoin. You had your beautiful price action, which allowed it to rise higher. And again, we can go back in time. While Bitcoin dominance was rising, look at the left screen here. Bitcoin USD was marking up. And then it's once it topped out over here, well, that's when Bitcoin went sideways and distributed. Very simple. You see, people rotate into altcoins, attention gets pulled away from Bitcoin. If attention's pulled away, that means capital's pulled away, which leads to, yes, your rotations into alts, your alt seasons, your massive rallies across those altcoins, but it leads to Bitcoin distributing and marking down. So that's what you need to watch out for here. If we are going to break out and actually have a markup above the all-time high rather than a sweep, well, you're going to see Bitcoin dominance rising. You're going to see this chart continue higher as Bitcoin continues higher. Now, if this is more likely to fail, you're going to see this chart continue to mark down. So what I'd be looking at on Bitcoin dominance is really this range here. So looking at this high and you're looking at this low. If we go to the weekly, this is really going to dictate what Bitcoin's going to do. And even if you look at the monthly, we've had the start of what could be a reversal on Bitcoin dominance. You hope it is, even for your altcoins, because we need Bitcoin to go higher, generate more profits, more of a wealth effect for altcoins to move more. Therefore, you've got a high, you've got a low here, and if we can push above that high, continue rallying while Bitcoin rallies, you can actually then see the green path, a potential breakout that holds. But if you see this low break as Bitcoin rallies towards all-time high, you're more likely going to see this find resistance and top out. So keep a close eye on this Bitcoin dominance. I showed you guys all the examples you can see. You need Bitcoin dominance rising for a markup, and once it starts falling, you just get distribution sideways. You get sweeps of liquidity that fail and lead to price dumping and distributing lower. So that is what to watch out for in terms of Bitcoin. And that is the full update when it comes to Bitcoin. Let's take a look at Ethereum, doing the same analysis. So monthly chart, what have we got? Well, you could see ETH had previous areas of distribution here, which we flipped and are now holding as support. So you distributed in both of these zones, and now it has actually led to price finding support at this zone. So we'll go to lower time frames and you'll see exactly what I mean by that. So we'll change this to orange. So on the weekly, as soon as we marked above this previous area of distribution, we found it as support, led to a move higher. Found it as support, so far leading to a move higher. Therefore, going back to the monthly, this is your zone to hold on ETH. It is 3.7K to 4.1K. If we go below there, bear market probably begins. If the bear market begins, and you're looking at your high time frame bands, 12 and 21, have they been respected? Not really on ETH. Monthly bands, have they been respected? Sort of. This is kind of where the low seems to form on ETH, but again, not so respected. So we go to the weekly. Are these bands respected? Again, you had that real show of weakness below. Could they find support? I'm not sure, but what does it tell you? None of the high time frame trend bands are being supported on ETH, so this chart better mark up higher and push above all-time highs if it's not going to get wrecked in the bear market. So as it stands, ETH needs to hold this zone as support. Otherwise, you won't want to be a buyer of ETH in the bear market, since none of the high time frame trend support bands are holding, and that's all. It's simple. It's because ETH hasn't actually trended this cycle in the high time frame. I know that might sound crazy, but it's true. It's still below all-time high. So what is this? This is all sideways range. Now, don't get me wrong, there's amazing trends within that higher time frame range, but this is not an asset that is trending high time frame. But that can all change. So what did we see here? We saw ETH have some distribution. No surprise, it distributed where it previously had distributed last cycle. So now this becomes the area to flip. If we look at the weekly on ETH, this zone is between 4.5k to 5k. So you want to see ETH get above this zone, which can lead to your next markup, and hopefully that can then hold as support and allow for your trend trades on ETH. So on the weekly, we do have fast trend support potentially on the weekly 12 and 21 EMA bands. Yet to be seen if they are respected though, because we haven't produced a new high yet. But if we do produce a new high, then you're looking at these bands as your fast trend support throughout. And it's hard to find trend support bands on ETH that are holding. If you look at the 3-day, you can say these are potentially hold with a fake out below, but really you've got tests here, a few wicks below. So they're not the best bands. However, 3-day bands have been pretty decent. So that could be your trend band support on ETH. Otherwise, the weekly, if it produces a new high, that is your trend respect. And then you're just looking for, as I said, price acceptance in this zone and to mark up above it. And when we look at Ethereum, so let's look at the Ethereum daily chart. It's the same story. You want to see it flip this resistance at 4.6k, get above it. That's going to lead to a move to all-time high. And from there, you're just seeing, do traders use the all-time high liquidity again as distribution? That's then going to toy with the idea of a potential liquidity sweep at all-time high, creating a top, or can we actually mark up above it? And it's the same situation with ETH. If you see ETH rally and get above this, you want to see it not take the all-time high, actually consolidate, build a base before then marking up. Because if it is just going to take the all-time high from here, then much like Bitcoin, you're just going straight up. And that can very easily lead to a sweep and distribution move down, because this is all a squeeze. You're not building a base. The strongest rallies build a base below where it's about to break out from. Even when you go back to Bitcoin, you're seeing, again, it's going up only. So you really do just want to see it ideally build a base, come back before then marking up and having a crack at that liquidity. Same story with ETH. Don't want to see it take this liquidity, because then potentially you're toying with distribution. You want to see it build a base before it does that. So keep an eye on the price action here. Again, we're just at the start of October. It's a long 3 months ahead. You've got clear levels to break when it comes to the monthly chart, looking at these distributions. So don't need to see it all mark up in one go. You can see it build a base here, consolidate in October, and that's going to allow for a much larger move higher on ETH. So that's it when it comes to the crypto charts. Now we can take a quick look at the altcoin market. So if we look at total 3, we did the same analysis. Again, look at this distribution zone over here. No surprise, it was a previous distribution zone, so it's been respected again this cycle. That's where the markup led to. And we've been able to wick into it in July, August, and September. We haven't been able to close into it on the monthly. So when you're looking at your altcoins outside of Bitcoin and ETH, You really need to see October start to close within this zone. That's something it hasn't been able to do. Because so far, sellers are showing up, they're showing up, they're showing up. But if it can close within this zone, then you're probably going to lead to a markup to the highs. That's going to lead to your altcoin rallies. And as I said, what is your trend support? It's the monthly 12 and 21 EMA bands. So what do we have here? Accumulation. Mark this in green. This is where smart money bought up your altcoins at your trend support at that high risk to reward, high time frame area. That's the area you want to buy as close to as possible. Again, they bought here. But now the area to flip is this distribution zone. So closing there in October, then you look good to make new highs on this chart. It's going to be bullish for your altcoins. If we can't close within this zone in October, then that's probably going to set a move, maybe even back to these 12 and 21 bands, as that distribution then is still holding for a fourth attempt. So October will be key on the monthly close for total 3. And when we look at others, so everything outside the top 10, again, monthly analysis, you have a clear distribution over here. And this has been distribution all cycle. So an area where sellers showed up on altcoins. Now, everything outside the top 10 has actually been visibly weaker. We haven't even wicked into this distribution level, whereas you've got Bitcoin trading in its distribution level, you've got ETH trading in its distribution level, you've got total 3 trading in its distribution level. However, others outside the top 10 not even reached it. So while that means it has a lot of catching up to do, so potentially it's got a big move ahead, even if it only manages to get to 430 billion, that's going to be some massive rallies across all coins. This chart in October really needs to start closing within this zone if it is going to have a serious markup to new all-time highs. So that's where you can visually see your clear weakness outside the top 10, with these wicks not even reaching this distribution zone. And in October, you need to see it reach that zone, close inside, and that of course will offer a very nice catch-up trade on your higher risk altcoins. So that is the full monthly analysis and weekly analysis of crypto, as well as your daily volume profiles. Now I want to quickly look at macro assets. So when we look at gold, what are we seeing? Well, gold is clearly trending. Bitcoin, however, is clearly not trending. And as a trend trader, you want to trade the assets which are clearly in a trend. So when we look at Bitcoin, what do we see here? Well, go to the monthly chart, remove these levels. Bitcoin is going sideways. And it's been sideways since July, while gold is marking up and trending. So we are in consolidation on Bitcoin. Now, is Bitcoin going to potentially catch up to gold? Maybe. However, Bitcoin is not trending until it starts marking up above the distribution level, like gold has been. Because you have to call the charts what they are. This is still a consolidation. It still could potentially be a distribution. We could wick the highs and come back inside. When an asset is trending, it's very obvious. That's why trend following trading can be some of the easiest. If we go back down to the weekly, what do you see in gold? You see these weekly 12 and 21 EMA bands holding as support, leading to new highs. Whereas Bitcoin, yes, it's holding, but it hasn't led to new highs yet. Now that can change, don't get me wrong. But what I'm saying here is you're seeing gold in its trend. You're seeing stocks also trending higher. Now, does this look like Bitcoin? Of course it doesn't. This chart is marking up every single week while Bitcoin's done nothing and gone sideways. So does that mean that potentially stocks and gold saw really nice flows towards the end of September, and now Bitcoin, with the strength it's had today and yesterday, Bitcoin's ready to take over? Potentially. If we go to the daily time frame, you're seeing stocks have a bit more of a consolidation day, while Bitcoin is having more of a trend day. And it's the same story when we go to gold, you're seeing gold actually have a red day, so a consolidation day, while Bitcoin is having a trend day. So far, this is what you want to see. Bitcoin actually starting to take over, but that doesn't confirm until Bitcoin can actually mark up. Until Bitcoin marks up out of this high, Bitcoin is not yet trending and it is still within this distribution range, while assets like gold are literally moving higher. And it's very obvious on the daily chart now how you can see literally gold's been marking up, stocks have been marking up during this time, while Bitcoin's been underperforming. And it's yet to be seen whether that underperformance is just Bitcoin lagging and if this consolidation can actually lead to the markup. And what I want to look at to really analyze that is this chart over here. So we got Bitcoin against gold. Now, this chart is very key. Probably not a chart you guys would look at much, but let me show you why it's important. If I can ever get a fresh chart, it seems impossible. So you saw when this chart topped out, January the 20th over here, what was that? The exact top on Bitcoin. You saw when this chart bottomed out, that was the exact bottom on Bitcoin. And again, look where this chart topped out, the exact top for Bitcoin. So this chart does matter because Bitcoin is obviously related to gold. It is seen as the digital gold. Gold marks up, Bitcoin consolidates. And then when gold consolidates, Bitcoin marks up. Bitcoin is like the altcoin to gold. And it moves very much in that way where the profits from gold flow into Bitcoin. And as this chart rises, that means Bitcoin's outperforming gold. And as it falls, that means Bitcoin's underperforming gold. So what you really want to look at is the high and low of this chart. As you know, it marks the major tops and major bottoms. It's important. So if we break above this high, that's probably going to lead to continuation higher. And that's going to allow Bitcoin to have more flows, more strength in its rally. So you've got many tools. You've got Bitcoin dominance to look at. Is that rising as Bitcoin is rising? You've got this chart, Bitcoin against gold. Is this breaking the high while Bitcoin is rising? Well, good. That's going to be more fuel for Bitcoin to actually mark up and trend. Or is it breaking down below the low? That's probably going to lead to distribution and Bitcoin to take the highs and fall back inside. So this is another signal for you guys to watch. And you can even look at Bitcoin against the NASDAQ. So Bitcoin against stocks, same thing. This chart's been super important. It's actually been marking up all cycle, and these trend line breakouts led to beautiful moves on Bitcoin when it gets the attention, because this chart literally shows you where the attention of capital is flowing. Is it Bitcoin or is it stocks? And the previous chart, is it Bitcoin or is it gold? And currently, if we can break this weekly high, it's probably going to set up a move towards the highs. And that can add confidence to what I was saying. If stocks start to consolidate, if gold starts to consolidate like we saw today, that's going to allow Bitcoin to have strength. And strength is what it needs to mark up. You can't have all three assets running at the same time. We know that because there's not enough capital to flow around. The markets are a rotation game of liquidity. So to watch this chart as another signal, if we start breaking this high, it's going to be strength for Bitcoin, or if we break this low, that's going to be weakness for Bitcoin. So that is Bitcoin relative strength. We've done monthly and weekly, we've done the macro assets, we've done the daily volume profiles, done Bitcoin dominance. Let's look at the low time frame EMA bands to wrap up. So let's try to find a fresh Bitcoin chart. Let's see. Grab this one. Let's remove that. Now, if we go to something like the 4 hour, now we're going to our lower time frames and we're zooming in even more to get a real picture of what we can see. So in all of your beautiful rallies on Bitcoin, what do you notice? You got the 50, purple EMA, above the 100, red EMA, above the 200, which is your blue EMA. Once these bands are in order and not chopping around like they did previously here, that's when you actually see your lovely markups. They hold as support, leads to markup, holds as support, leads to markup. And again, when does price top out? It's when these bands start crisscrossing and not getting respected. But then as soon as they get in order again, leads to markup, find support leads to markup. So before all the big rallies, these bands get respected and they are in order. Again, before the big rallies, these bands go into order and are respected on pullbacks. When they're not respected, that leads to your chop range consolidation. What do we have here? Bitcoin building higher high and higher low structure. Bands started crisscrossing, but formed bullish market structure. But before the big markup, the big move, what were they doing? They were 50, above the 100, above the 200, in order, holding as support, holding as support. That leads to your big markup. So we know before every significant rally on Bitcoin, you have these bands in order and being respected for some time. So what are the bands doing right now? Let's take a look. Right now, the bands have been crisscrossing. They have been flipping. And that's where you've seen this ranging price action, which has been choppy. Now, currently, if we can flip these bands into a period of strength where we have the 50 above the 100, above the 200 for a significant period, and you do see retests into the bands holding, well, that is often what precedes an actual markup. But while they're crisscrossing, you're at risk. Look at the crisscrosses here. They're not being respected, so then you get a sweep of the highs, which leads to the top. So if these bands can't continue staying in order for some time, we actually just see them start to expand. And you see price action really consolidate, build a base, find support of the bands. That's what's going to allow to a proper move. And maybe that even comes from later. Maybe there's more time for the bands to consolidate and price action to really just catch up with the bands. That's going to lead to, again, building the base at the highs, which allows for a proper markup. But if we just go up in one go, again, it's probably going to lead to a top and distribute, because that's not respecting these EMA bands, which we so often see. Again, it's building that bullish structure while the bands are in order. This is lovely base building before a markup. Base building before a markup. Bands all in order. Again, base building. And this is what triggered the rally initially. And again, we look at this example. What is this? It's all just base building before the proper markup with the bands in order. So we're not base building currently. The bands have, though, flipped in order. So that's one good sign. The bad sign is we've gone up only so far. And that's not bad in the sense that as long as you don't take the high, it's okay. You just now really do want to see October actually have a pullback and not just go up only, so that we can start base building, as I said, with these bands starting to then fan out. That is what leads to your proper markup. So that is something to watch out for on these H4 EMA bands, and it will be a similar story for Ethereum. When we look at ETH, bands have been crossing over. So again, you're seeing a proper markup here, very inefficient rally, while the bands are not in order on ETH currently. And as you see here, during all of ETH's bullish price action, during all the trends, bands flipped in order after falling out of order, leading to chop. They went in order with a base being built and led to a markup. Held as support, led to a new high. 200 held as support, led to new high. Held as support, and then you started crisscrossing over here. 100 flips to 50 bearishly, and that leads to your top. Very simple. So currently on ETH, the bands are not in bullish order, so you're not actually expecting this to mark up to new highs yet. You need to see price actually just build some sort of base, start to consolidate, build that energy, build that reaccumulation, allow smart money to actually start buying ETH and flipping the weak hands, the sellers, into strong buyers. That's what base building does. And then you see the bands fan out, and that actually can lead to your markups higher. So that's what to look for when it comes to your EMA bands. Quick little bit of alpha there on your lower time frame. So that's your low time frame EMA band analysis done. So we've done Bitcoin versus gold and stocks. Lastly, Q4 seasonality. Now, you would have all seen this on Twitter. Q4, most bullish month for Bitcoin. Yes, it is. I'm not gonna sit here and be like to you guys, oh my god, Q4 is amazing, let's all buy, this is crazy, because we already know it. We know the average returns on Bitcoin. What does this actually mean? It means we've got a long 3 months ahead, guys. It doesn't all have to happen in October. It's going to feel like it's all going to happen in October when the price just goes up only. But long 3 months ahead, you can have a red November and a green October and a green December. You can have a red October and a green November and a red December, all in a bullish Q4. So I want you to remember that Q4 is going to be a long period. It's what offers the greatest trading returns for me when I look back at my journal. Time to lock in. Don't think it all has to happen in 1 week. You've got 3 long months. No one day matters in the market unless you make it matter. So manage your risk. You never removing your stop loss or risking more than you would per trade. Stick to your systems and your rules, because if you don't stick to them, how can you repeat that success over time? Q4, it's a long 3 months ahead, but if you can lock in, stick to your risk management, can be one of the highest returning periods in the market. But only you can mess it up by not sticking to your risk management, making a terrible mistake in one day, because you can't get rich in a day, but you can lose it all in trading in a day. So I want you guys to remember that as a lesson to wrap up this monthly outlook. Keep that risk management in check. Keep your systems, your rules, your entry, stop loss, take profit all in check. Don't deviate from them, because those who are process driven make money, and those who are outcome driven, focused on the money, funnily enough, don't make money, because they're not adopting the habits of someone who's successful in trading. They're adopting the habits of someone who's more akin to gambling. So trading is a business, one of the hardest in the world, but can be one of the most fruitful if you do take it seriously. So that is the monthly outlook wrapped up. I hope you guys enjoyed this one. Let me know in the comments. As always, I'll see you guys in the next one.